So now talking about cloudy, so far we've been talking about inflation in very rational, hard numerical terms. Just before we came to you, we were talking about how the key gauge CPI, not WPI anymore, that was decades ago, 8% of the basket is food. Obviously, the central government can do something about subsidies, increase them if it wants. One thing it really cannot do much about is influence the weather, which is why I was talking about cloudy here, which has a huge impact on planting, on seasonalities, etc., and therefore on the cost of food. What are you assuming or penciling in terms of the weather, in terms of either drought or monsoon this year?
The early predictions from monsoon agencies are that it should be a normal monsoon, but it's a bit too early because it's really the spatial and the temporal distribution of monsoon that also is quite important, just relative to a pure normal monsoon forecast. What does it imply for food? We do think food inflationary pressures will pick up. Now, India is a net food exporter, but India's export of wheat is actually reducing the domestic marketable surplus, so that's pushing up cereal inflation. And the cost of farming has gone up. So we do think minimum support prices, which form the floor for food prices in India, will move higher. And as food moves up, there'll be an upward pressure on inflation expectations, on minimum wage settings. So on the whole, the pressure on food is going to be on the upside.
Sonal, there are reports saying 24 states and union territories have debt in excess of 30% as ratio of their GDP. In terms of debt sustainability, how troubling is this? And is there any truth that those states may be going down the same path as Sri Lanka in terms of default risk?
Well, on the whole, the default risk, in our view, is quite low. And from a debt sustainability standpoint, the nominal growth in India is running in excess of the average cost of borrowing. So debt is quite high, but we don't think it's on an unsustainable path. Also, India, I think, clearly the foreign exchange reserve position is very, very different to what Sri Lanka is seeing. We're sitting on 11 months of import cover. So the external vulnerability is much lesser, even compared to 2013, where India was hit by the taper tantrum. What I would say, though, Sri, is that because the fiscal starting point is from an elevated level, the space for the government to do a lot of fiscal support in the face of cost of living crisis and a potential growth slowdown is less. So that is more of a concern than debt sustainability.